Welcome back to the watch list. I'm Lindsay Melchek. My next conversation is with Chris Fogg, Finance and Investor Relations for Perpetua Resources. Now, this is a company who are more than just a mining company. They're dedicated to restoring an abandoned mining site, leading the way with sustainable mining practices. Now, this is also going to build transparent partnerships and invest in the local community to positively impact family, friends, and future generations. Welcome, Chris. Happy New Year.
Hi, Lindsay. Happy New Year. Thanks for having me.
So, Chris, it is so interesting what Perpetua does, and I'm sure there is a lot of hazards and hazardous materials that you come across. So, if we zone in on one of your projects, the company recently secured final approval from the U.S. Forest Service for its Stibnite gold project in Idaho. So, this, I guess, marks a significant advancement in the company's operations for sure. So, firstly, a huge congratulations to you and your team. And secondly, how does Perpetua Resources plan to address environmental concerns associated with the redevelopment of this historically impacted site? I mean, particularly regarding water quality and habitat restoration.
Thank you. Yeah, as you mentioned, this is a significant permitting milestone for Perpetua Resources and our stakeholders and our shareholders. This comes after 8 years of thorough review on different mine plans, including the final one that ultimately got approved. But 8 years of review, analysis, public feedback, making this plan the best that it absolutely could be for this proposed mine plan of operations and restoration. We at Perpetua think about those two things as interwoven. And so you'll see in our mine plan is restoration, concurrent restoration right along with the regular mining operations. So it's really a unique design and a unique thought process that went into this.
And that's just a true testament just to keep going and keep going and keep going, especially when you believe so much in what you're doing. So if we can flip now to the strategies on your end. So, what strategies will Perpetua employ to secure the estimated $1.3 billion in project financing required for this gold project? And, what are the anticipated timelines for achieving financial close and commencing construction?
Yeah, so let me break those two up. And I think first target, what we plan to do and what's involved in what I mentioned in terms of the restoration angle for this project and what we plan to do there. We have a unique opportunity to provide environmental benefits at the same time as providing antimony, which is a critical mineral and is a byproduct of our gold operations, which is needed for national security, the clean energy transition, among numerous other applications. So it's restoring the site, producing antimony that is absolutely needed. And also it's the gold production, which is the economic driver of this project. But ultimately what that economic driver allows us to do is to restore a historic mining district that's been abandoned after 100 years of mostly unregulated mining. Take a new approach, a responsible approach to which will ultimately result in restoring native fish passage, opening miles of spawning habitat that have been inaccessible for over 80 years, will improve water quality by reprocessing and safely storing legacy tailings that have been left at the site, ultimately reducing arsenic in rivers on site up to 90% compared to today, and will restore 450 acres of wetlands as part of the plan. So those are just a few of the things that went into the design of this project. First a gold project, producing an antimony byproduct credit, and then restoring a site. We call it a win-win-win. It's hard not to get behind this project.
I mean, Chris, this all sounds so exciting, and what a way to start the year. Now, given the projected annual production that you mentioned, 450,000 ounces of gold, and the potential to supply approximately 35% of U.S. antimony demand, how does Perpetua then plan to navigate market fluctuations in commodity prices to ensure the project's economic viability?
Yeah, I think it's in what we just talked about in terms of the antimony and the gold. This project's really unique because it stands alone as a gold asset, right? But then when you look at the antimony and how prices have trended, that's just another huge benefit on top of this already strong project. So we completed our 2020 feasibility study in 2020, and using the base case price assumptions there, which was $1,600 an ounce gold and $350 an ounce antimony, it's about a 95 to 5% revenue in gold's favor. At today's spot prices, you're probably looking more at 90-10 in terms of revenue split or higher. So it's still largely driven by gold, but what that antimony does is it creates a byproduct credit, which reduces our costs. So you see that in the cost line. But bottom line is, I think in producing that critical mineral, antimony, the gold fundamentals will help the antimony production weather different cycles in metal prices there. So the gold supports the production of the antimony. And then on the gold side, I think we have a lot of drivers that are, sensitive from inflation, factors like our low strip ratio, the low energy cost to power the mill from one of the cleanest energy grids in the country. And so for those reasons, our cost basis is going to be very competitive. Those healthy margins should allow us to weather even cycles in the gold price. So from a lot of different angles, we're really excited about it.
Yeah, that is definitely all things to be excited about. There's a lot more that we could absolutely delve into. And you know what? I definitely invite you to come back and we'll do just that. For now, thank you for joining me today.
Thanks, Lindsay.
Again, that was Chris Fogg, Finance and Investor Relations for Perpetua Resources. To learn more about them, check out their website at perpetuaresources.com. And if you'd like to join the conversation or have questions about what's happening in the markets, head to stockhouse.com. I'm Lindsay Melchuk. Thank you for tuning in.